If you think e.l.f. Beauty is just another makeup company, you may be missing one of the biggest growth stories hiding in plain sight in the entire stock market. While Wall Street panics over slowing consumer spending, tariffs, and guidance concerns, e.l.f. just quietly delivered its 29th consecutive quarter of net sales growth, grew revenue by 35%, expanding globally at an explosive pace, and continued taking market share from legacy beauty giants that are 10 times its size. Yet the stock has been crushed. Sentiment has turned cautious, and investors are suddenly acting like the growth story is over. But what if this quarter actually proved the exact opposite? What if e.l.f. Beauty has become stronger during the fear? And what if the company is laying the groundwork for a future that the market still doesn't fully understand? Today, we are breaking down e.l.f. Beauty's Fiscal Q4 2026 earnings report. We're going to look at the good, the bad, and the ugly, and why this stock may actually be deeply undervalued compared to the growth runway sitting right in front of it. Hey there, my name is Anthony. Welcome to Growing Your Wealth. So let's start with the numbers because they were honestly stronger than many expected. e.l.f. reported fiscal Q4 revenue of roughly $449 million. That's up 35% year over year, beating Wall Street expectations. Adjusted earnings per share on a non-GAAP basis came in at 32 cents, also ahead of estimates. Now, yes, a major contributor to that growth was Rhode. It added over $113 million in quarterly sales, but even excluding Rhode, the business still remained positively organic in a difficult retail environment. And that matters because the macro environment right now, it's not easy. Consumers are feeling pressure from inflation, rising gas prices, and economic uncertainty. Yet e.l.f. is still growing while many consumer brands are struggling just to stay flat. That says something important about the strength of this brand. One of the most bullish aspects of this report was the international expansion. International sales grew 75% in the most recent quarter. That is absolutely massive. Most investors still think of e.l.f. as mainly a US-based cosmetics company sitting on shelves at Target and Walmart, but management is clearly building something much larger.
Cosmetics company e.l.f. Beauty has won over makeup lovers from all over with its low prices, great dupes, and viral marketing.
Are we even surprised at this point? e.l.f. is always killing it.
This product is so good and it is so affordable.
e.l.f. just dropped all of these new dupes. We have to try them out.
It's cool. It's hot. It doesn't matter if it's cheap or if it's a dupe. They've kind of transcended that.
e.l.f. is now challenging legacy players like Estee Lauder. And in May 2025, it announced it was acquiring Hailey Bieber's skincare brand, Rhode, in a $1 billion deal.
Rhode was founded in 2022. $1 billion and founded 3 years ago.
They launched into 14 countries with 8 retail partners during the fiscal year. And Rhode is already becoming a global beauty phenomenon. This matters because international beauty markets are enormous and e.l.f. is still in the early innings of expansion. If management executes properly, international growth alone could become a major multi-year revenue driver. Another thing investors should not ignore is how diversified this company is becoming. A few years ago, e.l.f. was basically a one-trick pony. It was a single brand story. Now management says non-e.l.f. brands account for 30% of global consumption. Rhode has become a monster brand. Naturium, they continue growing, and skincare is becoming a much larger percentage of the business. That diversification is important because it lowers the risk and gives the company multiple growth engines at the same time. This is no longer just a cheap cosmetics brand. It is evolving into a scaled beauty platform. Now, let's talk about what may have been the most fascinating part of the entire earnings call. Management's comments about pricing and customer value. I mean, that's pretty big. During the call, CEO Tarang discussed how the company is actively testing lower prices in areas where prices had previously increased. One example was the Halo Glow Skin Tint product, where e.l.f. reduced the price from $18 back down to $14. And what happened? Sales exploded. Amazon sales jumped 38%. Retailer sales, they rose another 36%. And TikTok Shop experienced triple-digit growth. That is incredibly important because it proves the company understands its customers deeply. In a time where many corporations are squeezing consumers with high prices, e.l.f. is trying to create value. They are focused on unit velocity, customer loyalty, and long-term brand trust instead of simply maximizing short-term margins. This is exactly how enduring brands are built. I know in my last video, I said that the company raised prices to offset tariff liabilities, and they did. I also believe they wouldn't reduce those price increases when tariff pressures would soften, and they haven't. The users of e.l.f. brand cosmetics are loyal, but testing specific items' price changes to obtain real-time analytics that cater to a specific demographic is vital. This is why the users of e.l.f. love the brand. The CEO, he absolutely gets them. He understands their concerns and isn't beating around the bush to take care of his consumers. This guy is running a $3 billion company, and the way Terang answers analysts' questions on the earnings call pertaining to customer satisfaction, you would think he's running a $3 trillion business. I mean, you got to go back. You got to listen to that earnings call. I mean, the guy's awesome. He knows, he understands it. And honestly, that strategy may become a huge competitive advantage during a weaker economy. Consumers are becoming more price sensitive. Premium beauty products are expensive. e.l.f. is stepping into that environment, and they're offering products that look premium but cost dramatically less. Their lip oil sticks and melting lip balms were highlighted as premium quality innovation products at significantly lower prices than the prestige competitors. That combination of affordability plus trend-driven innovation is exactly why younger consumers continue gravitating toward the brand.
I thought the reason why things were so great was because the numbers were great. It's this acquisition that you made, which everybody seemed to know as being the right thing at the right time.
e.l.f. stock has been volatile over the past 3 years. But the company posted its first billion-dollar year in May 2024 after sales spiked 77%.
Last 3 years, our stock is up over 200%. So we continue to be able to prove people wrong. And part of that has to do with our ability to execute and the strong growth that we drive. And we have incredible white space ahead of us.
It really is in a league of its own. And we do view e.l.f. as a best-in-class executor.
And while the company reported its 26th straight quarter of net sales growth in its Q1 2026 earnings on August 6, 2025, it faces some challenges ahead.
But of course, this report was not perfect. There are definitely concerns investors need to acknowledge. Organic growth slowed considerably. Management admitted that one core e.l.f. brand has moderated from high single-digit growth to low single digits recently. Unit volume, it declined after the company implemented a $1 price increase across products last year. That shows, consumers are feeling the pressure in real time. And it also proves that even strong brands are not immune from economic realities. Guidance for fiscal 27 also came in softer than analysts wanted, especially on profitability. Investors clearly wanted more aggressive earnings guidance, and management remained cautious because of tariff uncertainties, oil prices, and you get it, macroeconomic pressures, geopolitical issues. I mean, it's going to bring in softer guidance. I get it. Then there is the tariff issue itself. Well, e.l.f. still has significant exposure to China manufacturing. Although they've reduced that exposure dramatically by shifting over 45% of production outside of China compared to just 1% 3 years ago. That diversification, effort, it deserves credit, but tariffs still remain a risk. The company dealt with an average tariff rate of roughly, I think it's about 55%. I think that's what I heard on the call. I can't remember to be exactly, but I think that's what it was during fiscal 26. Rising oil prices connected to geopolitical tensions could also increase transportation and commodity costs by another $15 to $20 million next year, according to management. So yes, There are real headwinds here. However, this is where the valuation story gets very interesting. Despite all of these challenges, the company is still projecting double-digit sales growth. International expansion is exploding, and Rode is scaling rapidly, and management continues investing aggressively into marketing, technology, AI, and infrastructure. Meanwhile, the stock has been beaten down heavily from previous highs. The market is acting like e.l.f.'s growth story is ending when the reality may be that the company is simply entering a new phase of scaling. Growth investors often forget that the market tends to punish transition periods even when the long-term opportunity remains intact. And here's something many investors may be overlooking. e.l.f. ended the year with roughly $290 million in cash and still has about $400 million remaining on its share repurchase authorization. Management literally repurchased shares because they believe the market valuation does not reflect the strength of the business fundamentals. That is a major signal. Companies closest to the numbers are often the most informed participants in the market. When leadership sees disconnect between valuation and execution, it absolutely matters. I'm telling you. What makes e.l.f. particularly unique is that it still behaves like a disruptive growth company, even after becoming a multi-billion-dollar brand. They move quickly. They dominate social media trends. They connect with Gen Z consumers better than legacy competitors.
The two most important things that have fueled e.l.f.'s strategy is marketing and its ability to offer dupes of some very popular prestige products at bargain prices. Shoppers actually asked e.l.f., please create a dupe of the drunk elephant. They're not actually comparing the products themselves. They won't say that publicly, but the consumer does that for them.
Selling dupes, or cheaper yet premium versions of popular makeup products, has been a part of e.l.f.'s business model since the beginning. But it has especially benefited with the acceleration of dupe culture over the past few years. Americans are picking knockoffs as they prioritize price and value, especially Gen Alpha, Gen Z, and millennial consumers who have made e.l.f. their most purchased cosmetic brand, according to the company.
We don't make dupes. What we take inspiration from what our community wants and the best products in prestige. We always put an e.l.f. twist on it so it's different and at a much better value. So the real innovation here is how you get that prestige quality at the incredible values we're able to.
And now they're expanding internationally while integrating major brands like Rode. Most legacy beauty companies would kill, and I mean they would do anything for this kind of momentum. Okay. In the book of Genesis 2:22 through 23, it reads, "Then the Lord God made a woman from the rib he had taken out of the man, and he brought her to the man. The man said, 'This is now bone of my bone and flesh of my flesh. She shall be called woman, for she was taken out of man.'" I absolutely love this verse because it shows the careful thought God put into his creation. And I'll be completely honest. As a husband to my wife, a father to my daughters, a son to my mother, and all of the amazing ladies that are in my life, out of all creation, I believe the woman is the most beautiful thing God has ever created. So as I look at what e.l.f. is trying to accomplish in accentuating the marvels and beauty of a woman, I can't help but think they're onto something. They listen to the people that affect their brand and mold to their liking in a positive way. And for, some of you fellas out there that use e.l.f. products as well, y'all are beautiful as well. I see you. Sometimes the market becomes so focused on short-term fear that it completely misses the new thing being built right in front of it. e.l.f. is not trying to become the old legacy beauty companies. They are building a modern beauty ecosystem designed for the next generation of consumers. And whether you're bullish or bearish on the stock, that transformation is becoming impossible to ignore. So, when I look at this earnings report, I see a company facing real macroeconomic pressure, but still executing at a remarkably high level. I see management adjusting prices to protect customer loyalty. I see international growth exploding. I see multiple brands scaling simultaneously. And I see a stock that may be priced far below the future growth potential still ahead of it. That does not mean the ride will be smooth. Volatility, it's likely here. But for long-term investors willing to look beyond the short-term noise, e.l.f. Beauty may end up being one of the most misunderstood growth stories in the market today. All right, that's it. I want to hear from you in the comments below. Do you think e.l.f. Beauty is undervalued after this earnings report, or are the slowing organic trends and macro risks too big to ignore? Drop your thoughts in the comments below. If you're like me and really like what AMD is accomplishing, think about watching this video right here. Bam. Hello, Lisa. How are you? Hello. As always, happy investing, and may God truly bless each and every one of you.